Based on the provided data for Bitcoin, a bullish investment strategy is recommended. The price history shows a strong upward trend, with recent highs exceeding $106, $000. The forecast predicts continued growth, reaching $105, $000 within the next week. This positive outlook, coupled with the support price of $98, $384.57, suggests a strong foundation for further price appreciation. Therefore, I suggest entering a long position at the current price of $104, $000. A stop loss at $98, $384.57 protects against potential downside risks, while a target price of $106, $108.15 capitalizes on the projected price increase and resistance level. This strategy aims to capitalize on the bullish momentum and potential for high returns in the short to medium term. Based on the provided information for Bitcoin Cash, a short-term investment strategy appears to be the most suitable approach. The 2-week price change exhibits a slight upward trend, but the 1-week forecast suggests a potential pullback. The current price is near the resistance level, indicating that a correction might be imminent. Therefore, an aggressive short-term strategy could involve taking a short position at the entry price of $446. This price point aligns with the forecast and offers a potential entry point for profiting from a price decline. The stop loss should be set at $465.40, the resistance level, to mitigate risk if the price unexpectedly moves higher. The target price should be set at $421.40, the support level, allowing for potential profit capture before the price potentially rebounds. This strategy capitalizes on the anticipated short-term price correction while managing risk through a well-defined stop loss. Based on the provided information for stacks, a short-term bearish strategy is recommended. The 2-week price change shows a downward trend, and the forecast indicates further declines in the coming week. The price is currently hovering near the resistance level of $1.503, suggesting a potential for a pullback. A short position would allow you to capitalize on this anticipated decline. An ideal entry price for this strategy would be $1.49, just below the resistance level. The stop loss should be set at $1.51, slightly above the entry price, to minimize potential losses if the price unexpectedly moves upwards. The target price could be set at $1.38, aligning with the support price and allowing for a decent profit margin. This strategy leverages the short-term bearish outlook and aims to capture potential price movements within the next week. Given the price trends and forecast for Ethereum, a medium-term investment strategy appears most suitable. The historical price data demonstrates a volatile nature with periods of both upward and downward movement. While the forecast suggests a slight downward trend in the coming week, the price remains relatively close to its recent highs and above the support level. This indicates a potential for consolidation or a minor correction before resuming an upward trajectory. Therefore, a long position is recommended with an entry price around $3,280, aligning with the current price and historical highs. A stop loss should be placed at $3,194.16, the identified support price, to mitigate potential losses. The target price can be set at $3,337.43, the resistance level, aiming to capitalize on a potential upward move. This strategy allows for participation in the potential upside while managing risk through a defined stop loss. Given the price trends and forecast for Ripple, an aggressive investment strategy would focus on a long-term approach to capitalize on the potential for sustained growth. The historical prices show a general upward trend, with the current price hovering near its support level of $2.5828. The forecast suggests a continued upward trajectory, with prices potentially reaching as high as $3.49 in the coming weeks. This positive outlook, coupled with the relatively low entry point, makes a long position a compelling option for a long-term investment strategy. To execute this strategy, an entry price of $2.92 would be ideal, allowing you to buy in at a price below the current forecast and near the historical support level. A stop loss should be placed at $2.5828, the support price, to protect against any unexpected downward price movement. The target price should be set at $3.49, aligning with the highest forecast price, allowing you to maximize potential profits while staying ahead of any potential market corrections. This long-term investment strategy aims to capitalize on the sustained growth potential of Ripple while mitigating risk through a well-defined stop-loss order. Given the price trends and forecast for Binance Coin, a medium-term investment strategy appears suitable. The historical prices demonstrate a fluctuating pattern, with recent dips and subsequent rebounds. The forecast suggests a slight decline in the coming week, but this dip could present an opportunity to enter a long position. The support price at $679.80 provides a solid base for potential price recovery, while the resistance at $715.15 indicates the upper limit for potential gains in the short term. Therefore, an aggressive investment strategy would involve entering a long position at $685, slightly above the current price and below the resistance level. The stop loss should be set at $675, ensuring protection against significant price drops. The target price should be set at $705, aiming to capitalize on a potential price increase towards the resistance level. This strategy allows for a balance between risk and reward, aiming to profit from a medium-term upward trend while mitigating potential losses. Stellar exhibits a mixed price trend over the past 2 weeks. While the price has seen some upward movement, it has also experienced periods of decline. The forecast suggests a slight upward trend in the coming week. Considering these factors, a medium-term investment strategy with a long position seems appropriate. The entry price should be set at $0.435, slightly above the current price and below the recent resistance level. The stop loss should be placed at $0.427, just below the support level, to minimize potential losses. The target price can be set at $0.485, aligning with the recent resistance and the forecast's projected upward movement. This strategy aims to capitalize on the potential for Stellar to continue its upward trend over the medium term. Given the provided price information for Toncoin, a cautious investment strategy with a medium-term perspective appears most suitable. The 2-week price history exhibits volatility, with a recent downward trend. The forecast suggests further declines in the coming week, reaching a potential low of $5.19. However, the support price at $4.819 provides a strong foundation, indicating a potential buying opportunity if the price dips. Therefore, a long position is recommended, aiming to capitalize on a potential rebound. An entry price around $5.15, slightly above the forecasted low, would allow for a margin of safety. The stop loss should be set at $4.90, below the support price, to minimize potential losses. The target price could be set at $5.60, aligning with the recent resistance level, allowing for a moderate profit potential. This strategy balances risk and reward, taking advantage of the potential for a price rebound while mitigating losses in case of further declines. The provided data for Cardano suggests a potentially bullish short to medium-term investment strategy. While the recent 2-week price history shows some volatility, the forecast indicates a gradual upward trend. The price is currently near its support level, suggesting a potential buying opportunity. Therefore, an investment strategy could involve taking a long position at the current price, around $0.989. The stop loss should be placed below the recent support level at $0.9783 to minimize potential losses. The target price could be set at $1.02, aligning with the first forecast price, allowing for a moderate profit. This strategy capitalizes on the potential for Cardano to appreciate towards the resistance level while managing risk effectively. Based on the provided Litecoin price information, a medium-term investment strategy appears most suitable. The historical price data reveals a clear upward trend, with recent fluctuations suggesting consolidation. The forecast price indicates continued growth, albeit at a slightly slower pace. This suggests a potential for moderate gains within the next few weeks. Therefore, a long position is recommended. An ideal entry price would be around $118, aligning with the recent consolidation and the forecast's upward trajectory. To manage risk, a stop loss should be set at $115, protecting against a potential pullback. The target price could be set at $125, aiming to capitalize on the forecast's upward momentum and the resistance level. This strategy balances risk and reward, allowing for potential profits while mitigating downside exposure. Based on the provided information for Doge-Coin, a short-term investment strategy appears to be most suitable. The 2-week price history shows a downward trend, with the recent forecast indicating continued declines. While the support price at $4.0892 offers a potential floor, the resistance level at $4.5011 suggests limited upward momentum. Given this outlook, a short position would aim to capitalize on the anticipated price decrease. To implement this strategy, an entry price of $4.65, the current price, would be appropriate. A stop loss could be set at $4.76, slightly above the recent price peak, to protect against unexpected price surges. The target price would be $4.41, aligning with the lowest point projected in the forecast. This approach allows for potential profit from the expected price decline while minimizing risk through a well-defined stop loss. Based on the provided Aptos price information, a cautious investment strategy would focus on a short-term approach to capitalize on potential price fluctuations. The historical prices show a volatile trend with recent declines, aligning with the downward forecast. The forecast suggests Aptos could drop from its current price towards the support level of $7.79. This indicates a bearish outlook in the short term, making a short position potentially profitable. An aggressive short-term strategy could involve entering a short position at the current price around $8.49. A stop loss could be placed at $8.74, above the current price and resistance level, to limit potential losses. The target price would be set at $7.87, slightly above the support level, allowing for profit taking before the price potentially rebounds. This strategy aims to profit from the anticipated decline in price while managing risk through a well-defined stop loss. Remember that short selling carries inherent risks, and this strategy should only be implemented with a thorough understanding of the market and risk management principles. Given the historical price data and the 1-week price forecast for SE, a short-term bearish strategy appears to be the most suitable. The historical prices show a downtrend, and the forecast predicts further declines. The price is currently near the resistance level of $0.364, suggesting a potential for a pullback. Therefore, an investment strategy would involve taking a short position at the entry price of $0.362. The stop loss should be set at $0.370 to limit potential losses if the price unexpectedly rises. The target price would be $0.335, aiming to profit from the predicted price decline. This strategy capitalizes on the short-term bearish outlook for SE and aims to generate profits from the anticipated price drop. Based on the provided Ethereum Classic price data, a short-term investment strategy focusing on a long position appears to be the most suitable. The historical price data reveals a consistent upward trend, with the current price hovering near the support level of $25.14. The forecast indicates continued upward momentum, suggesting a potential price increase towards the resistance level of $29.43. Therefore, an aggressive short-term investment strategy could involve entering a long position at the current market price of $25.14. A stop-loss order could be placed at $24.90 to minimize potential losses if the price unexpectedly reverses. The target price could be set at $28.50, allowing for a substantial profit if the price reaches the resistance level. This strategy capitalizes on the bullish price trends and forecast, aiming to generate returns within a short time frame. Based on the provided information for Polygon, a cautious short-term investment strategy is recommended. The historical price data shows a fluctuating trend with recent downward pressure, aligning with the bearish forecast. The forecast predicts a decline in price over the next week, reaching as low as $0.418. Given this outlook, a short position appears to be the most suitable approach. To implement this strategy, an entry price of $0.445 would be appropriate, slightly above the current price and close to the recent support level. A stop loss should be placed at $0.453 to limit potential losses if the price unexpectedly rebounds. The target price should be set at $0.425, aiming to capture a portion of the predicted decline. This strategy prioritizes risk management by setting a stop loss and focuses on capitalizing on the short-term bearish momentum observed in Polygon's price action and forecast. Given the price trends and forecast for AEVO, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the current price near its forecast and close to the support price. The resistance is at $0.3069, indicating limited upward momentum. In this scenario, a short position is advisable to capitalize on the potential for a price decrease towards the support level. For an aggressive short-term investment strategy, an entry price of $0.300 could be considered, aligning with the forecasted price. The stop loss should be set at $0.3069 to protect against any unexpected price recovery. The target price should be set at $0.2826, slightly above the support price, allowing you to take profits before the market hits major support. Given the price trends and forecast for optimism, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the current price hovering near the support level of $1.69. The forecast suggests further declines, with prices potentially dropping to $1.61 or lower. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy could involve entering a short position at $1.73, aligning with the current price and recent highs. The stop loss should be set at $1.79 to protect against any unexpected price recovery. The target price should be set at $1.65, allowing you to take profits before the market hits major support at $1.69. This strategy aims to capitalize on the potential for a short-term price decline while managing risk with a well-defined stop loss. Based on the provided price information for STRK, a cautious investment strategy would be suitable. The historical price data reveals a volatile trend with both upward and downward movements. The forecast price suggests a continued downward trend over the next week, reaching as low as $0.338. Considering the support price at $0.3724 and the forecast's direction, a short position seems more advantageous. An entry price of $0.381, slightly above the recent low and below the immediate resistance level, would be a good starting point. The stop loss should be set at $0.399, slightly above the entry price, to limit potential losses. The target price could be set at $0.365, aligning with the forecast's lower end, allowing for profit-taking before the price potentially reaches the support level. This strategy prioritizes risk management while aiming to capitalize on the anticipated downward price movement. Based on the Solana price history and forecast, an investment strategy focused on a short-term perspective appears promising. The historical data reveals a generally upward trend, with recent price fluctuations suggesting a period of consolidation. The forecast indicates continued upward movement, with prices projected to reach $267. While the resistance level of $261.58 presents a potential hurdle, the strong upward momentum and support at $243.25 suggest a higher probability of overcoming this resistance. Therefore, a long position in Solana is recommended for a short-term investment strategy. A suitable entry price would be around $253, close to the recent price action. A stop-loss order should be placed at $243.25 to limit potential losses if the price unexpectedly drops below support. The target price could be set at $267, aligning with the highest projected price in the forecast, allowing for a potentially profitable outcome within a short time frame. Based on the provided information for Jupiter, a short-term bearish investment strategy is recommended. The historical price data shows a recent downward trend, and the forecast predicts further declines in the coming week. The price is currently hovering near the support level of $0.7961, suggesting that a potential bounce might be short-lived. The resistance level at $1.1448 is far out of reach considering the current downward momentum. Therefore, an aggressive short-term strategy would involve taking a short position at the current market price of around 80 cents. The stop loss should be placed at $0.839, slightly above the recent high, to limit potential losses. The target price should be set at $0.7961, aiming to capitalize on the potential price drop towards the support level. This strategy takes advantage of the bearish sentiment and the potential for further price declines in the short term. Based on the provided price information for Render, a cautious investment strategy focusing on the short term appears most suitable. The historical price data shows a fluctuating trend with no clear upward or downward momentum. The forecast suggests a slight decline in price over the next week, further supporting a short-term bearish outlook. Given these factors, entering a short position at the current price of $7.09 seems reasonable. To manage risk effectively, a stop-loss order should be placed at $7.25, slightly above the current price and the recent resistance level. This will protect against any unexpected price surges. A target price of $6.978, the support level, could be set to capitalize on the anticipated price decline. This strategy aims to profit from a short-term correction in Render's price while minimizing potential losses. Given the price trends and forecast for Solana name service, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight upward trend, but the forecast indicates a potential downward movement in the coming week. The price is currently near the resistance level of $0.2236, suggesting a possible pullback. The support price at $0.2002 provides a potential buying opportunity if the price drops. Therefore, a short position is advisable for a short-term investment strategy. An entry price of $0.222 would allow you to capitalize on the potential downward movement. The stop loss should be set at $0.225 to protect against any unexpected price increase. The target price should be set at $0.201, aiming to profit from the potential decline towards the support level. This strategy allows for a limited risk exposure while potentially capturing gains from the anticipated price correction. Given the price trends and forecast for Doge-Coin, a medium-term investment strategy appears to be the most suitable approach. The historical prices show a fluctuating trend with recent consolidation around the $0.360 level. The forecast indicates a slight upward movement, suggesting a potential continuation of this consolidation or a breakout towards the resistance level of $0.397. Considering the support price at $0.352, a long position could be considered to capitalize on this potential upward movement. An entry price around $0.358, slightly above the current price and support level, would allow for a favorable risk-reward ratio. The stop loss should be set at $0.352, the identified support price, to minimize potential losses. The target price could be set at $0.390, aiming to capture a significant portion of the potential upside while leaving room for further price appreciation. This medium-term approach allows for a balanced strategy that considers both the potential for growth and the need for risk management. Based on the provided price information for PEPE, a short-term investment strategy appears to be the most prudent approach. The historical price data reveals a downward trend, with the forecast indicating further declines. The current price is hovering near the support level of $0.0000151, suggesting potential for further downward movement. Therefore, a short position on PEPE is recommended. An aggressive entry price could be around $0.0000157, aligning with the recent price action and the forecast. A stop-loss order should be placed at $0.0000160 to limit potential losses if the price unexpectedly rebounds. The target price could be set at $0.00000151, aiming to capture the anticipated decline towards the support level. This strategy capitalizes on the bearish sentiment and aims to profit from the potential price drop in the short term. Based on the provided information for SHIB, a short-term investment strategy appears most suitable. The historical price data shows volatility but generally lacks a clear upward or downward trend. The forecast, however, suggests a continued decline in price over the coming week. This indicates a potential opportunity to profit from the anticipated price drop. Therefore, an aggressive short-term investment strategy would involve taking a short position on SHIB. An entry price of $0.000210 aligns with the current price and the forecast's downward trajectory. To manage risk, a stop-loss order should be placed at $0.000212, the resistance level, to limit potential losses if the price unexpectedly rebounds. The target price should be set at $0.000201, the support price, aiming to capture a portion of the predicted price decline. This strategy capitalizes on the short-term bearish outlook indicated by the forecast while implementing risk management measures to protect against unforeseen market fluctuations. Given the provided price history and forecast for Dog with Hat, a short-term investment strategy appears most suitable. The 2-week price change demonstrates a downward trend, and the 1-week forecast predicts further declines. While the support price sits at $1.397, the forecast suggests prices could drop to $1.21 or lower. This bearish outlook indicates that a short position could be profitable. To execute this strategy, an entry price of $1.42, slightly above the current price and below the support level, would be appropriate. The stop loss should be set at $1.45, protecting against unexpected price surges. The target price would be $1.30, aiming to capture a significant portion of the anticipated decline. This strategy allows for potential profit from the short-term bearish trend in Dog with Hat while managing risk with a well-defined stop loss. The price history of Doge-Coin shows a general downward trend over the past 2 weeks. The forecast also suggests further declines in the coming week. Given this bearish outlook, a short-term investment strategy focusing on short positions seems appropriate. To execute this strategy, consider entering a short position at the current price of approximately $0.0052. Set a stop-loss order at $0.00547, slightly above the lowest predicted price, to limit potential losses. Aim for a target price of $0.0049, a conservative level that allows for profit-taking while leaving room for further price decline. This strategy capitalizes on the anticipated downward movement of Doge-Coin in the short term. Based on the provided near-protocol price history, forecast, and support/resistance levels, a cautious investment strategy with a medium-term perspective is recommended. The historical price data shows a fluctuating trend with recent consolidation around $5.09. The forecast predicts a slight downward movement in the coming week, reaching approximately $4.90. This suggests a potential opportunity to enter a long position at a discounted price. Considering the support price of $4.906, a conservative entry price could be set at $4.95, allowing for a buffer against immediate price drops. The stop loss should be placed at $4.85 to minimize potential losses. The target price could be set at $5.30, aiming to capture a potential upside move towards the resistance level of $5.439. This strategy balances risk and reward, allowing for potential profits while mitigating downside exposure. Based on the historical price data and the provided forecast for Internet Computer, a cautious short-term investment strategy appears to be most appropriate. The historical price data shows a volatile trend with a slight downward bias in recent weeks. The forecast indicates a continued downward trend over the next week. This suggests that Internet Computer might be vulnerable to further price declines in the short term. Therefore, a short position would be advisable to capitalize on this potential downward movement. An entry price around $9.79, aligning with the recent resistance level and the forecasted price, would be suitable. To manage risk, a stop-loss order should be placed at $9.91, slightly above the entry price, to limit potential losses if the price unexpectedly rises. The target price could be set at $9.09, the support level, aiming to capture a portion of the anticipated price decline. This strategy prioritizes risk management and aims to profit from the short-term bearish outlook for Internet Computer. Given the price trends and forecast for Injective, a cautious investment strategy would focus on a short-term approach. The historical prices show some fluctuations, but the forecast indicates a slight downward trend over the next week. While the current price is close to the support level of $20.42, the resistance at $23.88 suggests limited upside potential. In this scenario, a short position could be considered to capitalize on the anticipated price decline. For a short-term aggressive strategy, an entry price of $21.50 would be suitable, slightly above the current price and close to the resistance level. The stop-loss should be set at $22.50, providing a buffer against any unexpected price surges. The target price could be set at $20, aiming to capture a potential decline towards the support level. This strategy prioritizes risk management by limiting potential losses while aiming for a reasonable profit. Based on the provided BTC price history and forecast, a cautious short-term investment strategy appears prudent. The historical price data reveals a fluctuating trend with a recent downward movement. The forecast further suggests a continued decline in price over the next week. While the support price offers a potential floor, the resistance price suggests limited upward potential in the near term. Therefore, a short position on BTC is recommended. An entry price around $400, aligned with the first forecast price, would be suitable. A stop-loss should be set slightly above the current price at $433 to minimize potential losses. The target price could be set at $320.30, the support price, to capitalize on the anticipated downward movement. This strategy aims to profit from the short-term bearish trend while managing risk through a defined stop-loss. Based on the provided price information for THETA network, a short-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend, with recent dips suggesting potential for further downward movement. The forecast price also indicates a decline over the next week, converging with the support price. Therefore, a short position on THETA network is recommended. An entry price of $2.12, near the resistance level, allows for capturing potential downside movement. The stop-loss should be placed at $2.18, slightly above the recent high, to limit potential losses. The target price is set at $1.965, aligning with the support price and offering a reasonable profit margin. This strategy capitalizes on the anticipated price decline while mitigating risk through a well-defined stop-loss order. Given the price trends and forecast for WorldCoin, a medium-term investment strategy appears most suitable. While the 2-week price change shows some volatility, the forecast suggests a gradual upward movement over the next week. The historical prices hover around the support price of $2.129, indicating a potential floor for the asset. The resistance level at $2.292 suggests a ceiling for the immediate future, but the forecast price points to a potential breach in the coming week. Therefore, a long position is recommended to capitalize on this anticipated upward movement. An entry price of $2.16, slightly above the current price and the recent historical lows, offers a good entry point. A stop-loss at $2.129, aligning with the support price, will protect against significant downside risk. The target price should be set at $2.292, aiming to capture the potential price increase towards the immediate resistance level. This strategy allows for a balanced approach, leveraging the forecast while mitigating risk with a well-defined stop-loss. Given the price trends and forecast for Hooked Protocol, a cautious investment strategy would focus on a short-term approach. The historical prices show a consistent downward trend, with the current price near its forecast and below the historical high, The forecast suggests Hooked Protocol could continue to decline over the next week, reaching as low as $0.257. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $0.325 would be ideal, aligning with the current price and allowing for potential profit as the price moves towards the forecast low. The stop loss should be set at 34 cents to protect against any unexpected price recovery. The target price should be set at 26 cents, slightly above the forecasted lowest price, allowing you to take profits before the market hits potential support levels. Based on the provided information for Artificial Superintelligence Alliance, a cautious investment strategy focused on the short term appears most suitable. The 2-week price change reveals a downward trend, and the forecast indicates further declines in the coming week. While the support price at $1.245 offers a potential floor, the resistance at $1.362 suggests limited upside potential in the near future. Therefore, a short position on Artificial Superintelligence Alliance is recommended. An aggressive entry price would be $1.32, aligning with the current price and recent price action. The stop loss should be set at $1.34, slightly above the current price, to protect against unexpected price surges. The target price should be $1.25, reflecting the forecast's predicted decline and offering a reasonable profit margin. This strategy aims to capitalize on the anticipated short-term price decline while managing risk through a well-defined stop loss. Polkadot shows a recent downward trend in its 2-week price change, and the 1-week forecast predicts further declines. The historical prices and the forecast suggest a bearish outlook for Polkadot in the short term. The support price at $6.165 indicates a potential floor for the price, while the resistance at $6.587 shows the immediate hurdle for any upward movement. Given this context, a short position on Polkadot appears to be the most suitable strategy. To implement this strategy, an entry price of $6.44, close to the current price and above the support level, would be appropriate. A stop-loss order should be placed at $6.587, slightly above the entry price and below the resistance level, to limit potential losses. The target price could be set at $6.165, aiming to capture a profit as the price potentially drops towards the support level. This strategy aims to capitalize on the anticipated downward movement of Polkadot in the short term, while managing risk through a well-defined stop-loss order. Given the price trends and forecast for Filecoin, a short-term investment strategy focusing on a long position appears suitable. The historical prices show a slight upward movement, with the current price hovering near the support level of $4.93. The forecast suggests a continued upward trend, with prices potentially reaching $5.19 in the short term. This indicates a bullish outlook in the short term, making a long position the most suitable strategy to capitalize on the anticipated price increase. For an aggressive short-term investment strategy, an entry price of $5.08, aligning with the current price, would be ideal. The stop loss should be set at $4.93, slightly below the support level, to protect against any unexpected price decline. The target price should be set at $5.19, aligning with the forecasted highest price, allowing you to take profits before the market potentially encounters resistance. Based on the provided price data for Conflux, a cautious yet potentially profitable investment strategy involves taking a long position. The historical price data reveals a fluctuating trend, with recent dips towards the support price of $0.148. However, the forecast suggests a gradual upward movement, with prices predicted to reach $0.154 within the next week. This suggests a potential opportunity to buy low and sell high. Therefore, an entry price of $0.149 would allow you to capitalize on the anticipated price increase. A stop loss at $0.147 would protect your investment from significant losses if the price drops unexpectedly. The target price should be set at 16 cents, aiming to secure profits before the price potentially reaches its resistance level. This strategy aligns with a medium-term investment perspective, allowing you to ride the potential upward wave of conflux while managing risk effectively. Based on the provided price information for Ethereum name service, a medium-term investment strategy appears most suitable. The historical price data shows a slight upward trend, with the price oscillating around a relatively stable range. The forecast suggests continued stability in the short term, with prices hovering around the $34 level. This indicates a sideways trend, offering opportunities for profit through range-bound trading. Therefore, a medium-term investment strategy with a long position is recommended. An entry price of $33.50 would allow for a purchase at a slight discount to the current market price and the forecast. A stop loss at $33 would protect against significant downside risk, while a target price of $35.50 aims to capitalize on potential upward movement within the foreseeable future. This strategy allows for potential profit from both price appreciation and market stability. Based on the provided avalanche price information, a cautious investment strategy with a medium-term perspective appears most suitable. While the 2-week price change exhibits volatility, the forecast suggests a consolidation phase around the $35 to $36 price range. This indicates a period of indecision in the market, making aggressive long or short positions risky. Therefore, a wait-and-see approach is recommended. An entry point could be considered around $35.50, slightly above the support price, with a stop loss set at $35. This minimizes potential losses during initial market fluctuations. The target price should be set at $40, aligning with the recent highs and the resistance level. This strategy allows for potential profit if Avalanche manages to break through the current consolidation phase and resume its upward trajectory. Based on the provided Bitcoin price data, including historical prices, forecast prices, support price, and resistance price, an investment strategy focusing on a short-term, bullish outlook appears promising. The historical price data reveals an overall upward trend, with Bitcoin recently experiencing a period of consolidation. The forecast prices suggest a continued upward movement, with prices expected to reach around $0.0498 within the next week. Considering these factors, a long position in Bitcoin is recommended. A suitable entry price would be around $0.0462, aligning with the current price and offering potential for growth. The stop loss should be placed at $0.04477, the support price, to minimize potential losses. The target price can be set at $0.05155, the resistance price, aiming to capture the full potential upside. This strategy capitalizes on the anticipated upward momentum of Bitcoin within a short time frame, allowing for potential profits while managing risk effectively. Based on the provided information for PENDLE, a bearish short-term investment strategy appears most suitable. The 2-week price change demonstrates a downward trend, and the forecast predicts further declines. The current price is near the resistance level, suggesting a potential for a pullback. Therefore, an entry price of $3.85 aligns with the recent price action and the forecast. A stop loss should be set at $3.94 to minimize potential losses if the price unexpectedly surges. The target price could be set at $3.55, the lowest predicted price in the forecast. This strategy aims to capitalize on the anticipated price decline while managing risk through a defined stop loss. Based on the provided The Sandbox price information, a cautious investment strategy focused on the short term would be advisable. The 2-week price change reveals a fluctuating trend with recent declines, while the 1-week forecast suggests further downward movement. Although the support price at $0.5463 indicates a potential floor for the price, the historical price data and the forecast point towards a continued bearish sentiment in the near term. Therefore, a short position on the Sandbox is recommended. An entry price around 57 cents, slightly above the current price and close to the recent resistance, would allow for a potential profit if the price drops towards the support level. The stop loss should be placed at $0.584, above the entry price to minimize risk, while the target price could be set at 55 cents, slightly above the support price to secure profits before any potential rebound. This strategy capitalizes on the anticipated short-term decline while managing risk effectively. Given the price trends and forecast for Decentraland, a cautious investment strategy focusing on the short term would be prudent. The historical prices show a volatile pattern with recent declines. While the forecast suggests a slight increase in the coming week, it remains within a relatively narrow range, indicating limited upward momentum. The support price of $0.4556 and the resistance price of $0.4887 further highlight this limited movement. Therefore, a short-term long position is recommended, aiming to capitalize on any potential minor price increases. An entry price of $0.476 could be considered, aligning with the current price and recent lows. To manage risk, a stop-loss order should be placed at $0.4556, the identified support level, to limit potential losses. The target price could be set at $0.4887, the resistance level, aiming to capture any upward movement before encountering potential selling pressure. This strategy allows for participation in a potential short-term rally while mitigating risk through a well-defined stop-loss order. Based on the provided ENG coin price information, a cautious short-term investment strategy appears most suitable. The 2-week price history demonstrates a fluctuating trend with a recent downward movement. The forecast further suggests a continuation of this downward trend, with prices potentially dropping towards the support level of $0.1673. Given this bearish outlook, a short position would be the preferred approach to capitalize on the anticipated price decline. To implement this strategy, an entry price of $0.185 could be considered, allowing for a small buffer above the current price. A stop-loss order should be placed at $0.1911, the resistance price, to limit potential losses if the price unexpectedly rebounds. The target price could be set at $0.1673, the support level, aiming to capture the majority of the projected price decline. This strategy emphasizes risk management and capitalizes on the short-term bearish outlook for ENG coin. Given the price trends and forecast for Uniswap, a short-term investment strategy appears most suitable. The historical prices show a slight downward trend, and the forecast suggests a continuation of this decline over the next week. While the support price is at $10.867, the current price is significantly higher, indicating a potential for further downward movement. Therefore, a short position is recommended to capitalize on this anticipated decline. An entry price of $13 aligns with the current price and the forecasted price decline. A stop loss at $13.50 would protect against any unexpected price increases. The target price should be set at $12, allowing for a reasonable profit margin before reaching the support level. This strategy aims to take advantage of the short-term bearish momentum in Uniswap. Given the price trends and forecast for Chainlink, a cautious investment strategy would focus on a short to medium-term approach. The historical prices show a relatively stable upward trend, but the recent price action has been consolidating around the $25 mark. The forecast suggests a slight upward movement in the coming weeks, indicating a potential continuation of the bullish trend. However, the price is currently close to its resistance level of $26.98, suggesting that a significant breakout might be challenging in the near term. Therefore, a long position is advisable with a cautious approach. A suitable entry price would be around $25.20, allowing you to buy in at a slightly discounted price while still benefiting from the potential upward movement. The stop loss should be set at $24.80 to limit potential losses if the price reverses downwards. The target price could be set at $26.50, aiming to capture a moderate profit if the price breaks through the resistance level. This strategy balances risk and reward, allowing you to participate in the potential upside of Chainlink while mitigating the potential downside. Given the price trends and forecast for Aave, an aggressive investment strategy would focus on a medium-term approach. The historical prices demonstrate a general upward trend, with recent fluctuations indicating a potential consolidation phase. The forecast suggests a continuation of this upward momentum, reaching prices around $354 to $358 in the coming week. The support price at $305.61 provides a safety net, while the resistance at $370.42 indicates a potential ceiling for the near future. Therefore, a long position on Aave is advisable for a medium-term investment strategy. An entry price around $330 would allow you to buy in at a relatively attractive price point, below the current forecast. A stop loss could be set at $315 to protect against unexpected price drops, while a target price of $360 would capture significant potential upside if the forecast proves accurate. This strategy aims to capitalize on the expected price appreciation while managing risk effectively. Given the EOS price history and forecast, a short-term investment strategy with a focus on long positions appears most suitable. The historical price data shows a general upward trend, with recent price fluctuations within a relatively tight range. The forecast indicates a slight upward movement in the coming week, suggesting continued upward momentum. The support price at $0.7988 provides a solid base for potential price increases, while the resistance at $0.9233 presents a potential ceiling for short-term gains. Therefore, an aggressive short-term investment strategy would involve entering a long position at the current price of $0.806. A stop-loss order should be placed at $0.7988, below the support price, to limit potential losses. The target price could be set at $0.842, aligning with the first forecast price, allowing for a modest profit within a short time frame. This strategy capitalizes on the anticipated upward price movement while managing risk effectively. Given the price trends and forecast for Tron, a short-term investment strategy is recommended to capitalize on the anticipated price fluctuations. The historical prices show a slight upward trend with recent fluctuations around 24 cents. The forecast suggests a potential rise towards $0.248 in the coming week, followed by a slight dip. Therefore, a long position is suggested for this short-term investment strategy. The entry price should be set at 24 cents, aligning with the current price and providing a buffer for potential price dips. The stop loss should be placed at $0.238, below the recent support level, to minimize potential losses. The target price can be set at $0.248, aiming to capture the projected price increase. This strategy allows for potential profit from the short-term price movement while managing risk through a well-defined stop loss. Given the price trends and forecast for Suncoin, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend, with the current price hovering near the support level of $0.02106. The forecast suggests Suncoin might continue to decline, reaching as low as $0.0215 in the coming week. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $0.0223, slightly above the current price, allows for a small margin of safety. The stop loss should be set at $0.0228 to protect against any unexpected price surges. The target price should be set at $0.0210, slightly above the support level, allowing you to take profits before the price potentially rebounds. This strategy aims to capitalize on the short-term downward momentum of Suncoin while minimizing risk.